Hello. What's up, guys? Okay, welcome again. Today we'll be discussing about, as you can be able to see on what I have on the PDF here with me. This is my own PDF. I usually write sometimes my PDFs, especially when it comes to my trading journals. But today we'll be discussing, this one will be a continuation of what we talked about last video. Last time we did a video on market structure, that is uptrend, and today I will be discussing about market structure. In this case, we shall be talking about consolidation and consolidation or ranging market structure. I will be taking you theory there. We can talk about some few examples and on how you're supposed to tackle it. I really appreciate taking your time to be in this channel, whereby you can learn and implement your strategy, or implement a few strategy or few skills that you're going to learn here into your strategy or into your trainings. Now, let me go back into my PDF. As you can see, here I have what we call market structure, and in this case we shall be talking about consolidation or the ranging market structure. What is a consolidation range, or what is a consolidation or ranging? My definition is very simple, whereby I said that I have written that consolidation is a period of range bound activity after an extended price move. Last time I talked about whereby, like for example, the market is moving an uptrend, whereby a market makes a high. You can be in a position to say that it mainly happens after the trend has been stretched of indecision. Of course, the market by this time will be making equal highs and equal lows. Let me take you into a certain chart, like for example this one. When I talk about that the market, like consolidation, is a stage of whereby the market shows indecision after an extended price move. Let's say, for example, in this part, as you can be in a position to see, let me just do this. So once I say that the market structure, is a move whereby it makes equal highs and equal lows after an extended price move. Let's say, for example, if the market was moving in an uptrend like this, and then after reaching a point like this, whereby you find that the market itself now starts ranging. This is how the market now starts being, or once we talk about ranging, this is what I mean. That the market was in an extended move direction, then it started what? Consolidating. That is actually what it means by consolidation. Now, if we can go back and see that whereby, as this chart as I have illustrated, as you can be in a position to say that this one, once the market is making equal highs and equal lows, the equal highs are the resistance, and once it comes to the equal lows are the supports, or the supply, like resistance or the supply zone, and support zone or the demand zone. Therefore, once it comes to the ranging market, the market does not stay in this zone like for long. It has a specific period, like it has a period of time when the market is supposed to, like when the market is in consolidation, especially when there is no much volatility. You see, yeah. But in consolidation, we shall be discussing about different types of what you are supposed to expect in this market. Now, let's go back. What to expect and how to react. Remember, I always say in my trading, in my all videos, that trading is not predicting. It's not a matter of how smart you are in predicting. It's all about reacting. how you gonna react if the market shows you that the direction is an uptrend. Therefore, what do you expect or how to react or trade? I said this: when the market is in a consolidation state, only two expectations that as a trader should have. Only two expectations. And what are those expectations? Those expectations are breakout. Those expectations are breakout, or the price continue to be in a consolidation state. Whereby I said that the price can't remain in consolidation for long. Hence, the price will end up breaking either resistance or supply zone. Those are the two conditions, or as a trader you're supposed to expect once the market is in a consolidation state. Whereby I said breakout is the most expectations that high number of traders have, because the market won't be in a consolidation state forever. The market won't be in consolidation forever. Therefore, breaking is the most expectation that the high number of traders have. This written material gives tips on how to trade on both or to trade both scenarios. If you want to read my PDFs, I'm building up my website, so very soon you'll be in a position to access all my PDFs, whereby I post each and every trade that I have. All my trading journals are on my website, so you can visit my website and read some few PDFs from there and gather some knowledge from those PDFs. Now, since the market can't stay into a consolidation forever, therefore it is very important for us, or for me, to communicate or to talk about or to discuss about breakout. Therefore, breakout is when the price moves above resistance level or move below the support level. Therefore, breakout indicates, this is a very key thing that you're supposed to understand. Breakout indicates the potential for the price to start trending in the direction of the breakout. Let me explain that. Let me just explain. Let me go back to my chart. Once I mean about the consolidation, whereby I'm talking about consolidation. Let's say, for example, the market was moving in a downtrend into this direction, whereby it's making a low, high lows, low, high lows. Then the market starts consolidating into this kind of market structure. Now, after the market is into this kind of a consolidation, it especially gathers, or it accumulates the volume, or we call it energy accumulation. Then we can get what we call energy release. Now, let's say, for example, this market has consolidated into that state, whereby you're gonna come and draw your own resistance level. You can draw your own resistance level here, like this. You can draw your own resistance there, and you can also draw your support level. Now, what I mean is once the market has broken one of these, let's say, for example, the market happens to break the resistance level, this one, it shows a very potential for the market to continue into that direction, whereby you're not supposed to enter immediately. Below the PDF, as you continue reading the PDF, you will come to understand that I have talked about something we call resistance, about retest, whereby the market breaks a certain level, then the market comes back. The broken resistance is now turned into support. Therefore, the market comes into that zone and continues into the direction which it's supposed to be to continue. That is exactly what I mean. Therefore, if the market now happens to go back into that, happens to break one of the zones. Now, here are the thing. There are three types of breakouts which you are supposed to master. There are three, most of them. Whereby the first one we have upside breakout, whereby if the market breaks now the resistance, it shows a very potential of the market moving into the upward direction, which is the uptrend direction. If you want to know how the market makes a uptrend market, you can watch the video in my channel where I have talked very well illustrating the upward direction. Now we still have another one, which is the downside breakout. This one is when the market now breaks the breakout. I will discuss them one by one. And then we have the last one, which is now fake breakout. Fake breakout, this is when the market tends to break a resistance but fails to have that kind of power or that liquidity to move into the direction which it has broken. This is mainly discussed, or is mainly called what you call liquidity grab, whereby most of the time you find that fake breakout runs for your stop losses. Exactly. Now let's go deep into each of them. Now the first one I will be illustrating the upside breakout. Upside breakout, this is whereby the market breaks the resistance, and I have illustrated very well. I have said that a breakout to the upside indicates that the price will start trending higher. This signals traders to possibly go long or exit their short positions. Now, what do I mean? Let's go to my chart here and get to understand. This is what I mean. This is where now the market now comes into a state of consolidation. Let's say, for example, the market now starts consolidating here, making high highs and high lows, like you see, making high highs into this position. Let me have this one. Yeah, making very high, like equal highs, and when the market is making high highs, like equal highs and equal lows, as you can be in a position to see that the market was really pushing towards the resistance, and finally it had what we call the breakout of the resistance. It broke upward to the what? It broke to the upward. Now the resistance is now turned into support. The resistance is now turned into support, whereby as a trader you're supposed to wait for the retest, and then you take your buys and you enjoy. That's very simple. Now that is now the upward direction. As you can be in a position to see, I have put very well some like a very good illustration diagram picture. As you can see, this is a screenshot especially of what I have talked about there. Now, in either scenarios, an upward breakout through the upper zone, that is now the resistance zone, signals an end to the consolidation period and to start off an uptrend. Simple. If the market happens to break the resistance zone, it shows that it has now come into the end of consolidation state, is now ready to move into an uptrend direction. Now, once the resistance level is broken, it reverses what? Its role and turns into a support level. Right? If the price experiences a correction or a pullback. Let's go back. What I mean is, for example, here the market is now currently experiencing this type of a resistance zone here. Therefore, this zone is now turned into, after now the breakout, if this structure or this price happens to break this resistance, before it was the resistance, but once it is broken that now into this type, it means that now it has changed its role from resistance into support. Therefore, into the support zone, what are you supposed to do? You are supposed to look for buys, and especially, and therefore you're gonna have your own buys from this zone. Yeah, now that is now the what when it comes to the uptrend market. Let's now go to the to the second part, whereby we shall be talking about the downside breakout. Now, the downside breakout, a breakout to the downside, also is called as breakdown. The price will start trending lower. This signals traders to possibly go for shorts or exit long position. And I have a good illustration here. Let's go back, let's go into our chart. Here. Now, this chart, I have marked a very good area of resistance and another very good zone of support zone. Therefore, that the market is now currently in a short-term mini consolidation stage of the market, making almost equal highs and equal lows, as you can be in a position to see. This is whereby now we call this type of whereby the support level or support zone is broken. First of all, we have to have the zone must be broken. Then after breaking the zone, the market must come back to retest this zone here in this manner, and then you're gonna have your own sales or short positions into that area, and you're gonna have your own and like your own trades running like that, and you're gonna make some few boxes. Now, let's go back. What does the PDF also explains? This one. Once the price breaks the support, it reverses its role and it turns into a resistance level if the price experiences what you call a correction or a pullback. I have put a good very picture there, a very good diagram, as you can be in a position to see. We have the breakout first of all, and then we have what we call the retest, and then you enter into a trade. Now, breakouts that occurs on a high volume shows great conviction, which means the price is more likely to trend in that direction, whereby especially if you're gonna get breakouts whereby we have large number, like we have a great volume, or the candlestick which are being made into the breakout, especially are either marabuzos and these big candles with imbalance and fair value gap. These are most valuable, like significant. What the fuck is that? All right, those are the most important break of structure things you are supposed to observe. Now, let's go back. Whereby we have that into the PDF is illustrating very well that the breakout that occurs on lower volume shows weakness of conviction, weak conviction, and more prone to failure. Price is likely to trend in breakout direction. If the breakout is not that much significant, the price will go back into the consolidation stage. Now, let's now go to the final breakout. The final breakout, this is now whereby we call it the fake breakout, and this is most cases whereby most of the people say that they don't trade with this. Fake breakout. This is whereby most of the people are caught up into this type of market structure or market behavior, and most of the traders fail to trade with the stop loss. This is one of the greatest mistakes that you can be in a position to do. If you want to trade, I would advise you, please consider trading using your stop losses. Most of the traders don't trade with their stop losses. My friend, one day, one time you'll come to understand. Let's go back. Now, this is what we call breakout. And why do they trade without stop losses? Because they set a stop loss above the key zone, maybe resistance or support level, and then the price just happens to move into the into what? Moves towards the stop loss, hit the stop loss, then start going into the direction they had anticipated for. That is now what leads to that kind of fear of losing. You are afraid that you're gonna hit the stop loss and then the price moves into a direction. And that is one of the big mistakes that most people make. Don't you dare trade with what you like, trade without stop loss. It's better you sit down and strategize your risk management, and at least come up with a good risk management whereby you will not be in a position to be, the stop loss will not be in a position to be hit, and then you lose your money and the market goes into the direction you had anticipated for. Now, fake breakout, this is also known as the liquidity grab, whereby the liquidity is whereby you find the market now hits your stop loss and then goes into the direction you had anticipated for. Now, the price tends to break either of the two zones, either resistance or the support level, and then comes back to the consolidation stage, then moves into the correct direction. Whereby, let me just go and let me just illustrate from this kind of using a diagram so that you can be in a position to see. Now, this is what I mean. The market is moving to this type of a direction, an uptrend, then the market now starts moving into a consolidation stage, whereby into that kind of a direction there. Now, once you come into analyzation of this market, maybe doing technical analysis, you're gonna have your own resistance zone there. You're gonna have your own support level here. Now, after doing your own technical and fundamental analysis, you come to understand that the market, its direction is an uptrend, that the market will go what? Will have to move into an uptrend, whereby you now come and you set your buys, maybe buy stops or whatever. Now, you have your buy stops here from to this zone. Let me just do it. Maybe you have your own buy stops here. This is now your entry. Let's say, let me have another color for the entries. Now, that is now your buy stops. Where is your stop loss? Your stop loss will be around here, below, because this is what the book says, whereby the below the zone, these are above the low, they are below the resistance, or above the supply zone is whereby you're supposed to have your stop loss. Now, what the market tends to do is, the market just comes, triggers your entry, then comes for your stop loss, then the market moves into the same direction. That is now the fake breakout, because this one is now what you call the breakout, or either the two once it comes to the support zone breakout. Now, that is one of the things which you are supposed to observe. That is now what we call the fake breakout. Let me have an example of the fake breakout here so that you can be in a position to see. This is what I mean. For you to understand, very well, or to identify most of the areas, it is very good to zoom. I don't know whether it is to zoom out or to zoom in your chart so that you can be in a position to see. As you can be in a position to see that this market, this key zone here was in a position to be touched once. There was another, after moving upward, there was another touch here, the second touch. Then there was another test here, and then the market came and broke down into this part. Let me just happen to zoom it so that you can be in a position to understand what I mean. The market came, broke this structure here, broke this structure, where most of the time people were waiting for the retest, and the market just came back here and had this type of consolidation whereby most of the people were selling, and all of a sudden the market went into the upward direction. Now this is what we call the fake breakout, and it is very simple to identify once you are a good trader. Once you are a good trader, and you can be in a position to see. That was on an example, and then still here we have another example. Now we have come to the end of the PDF, so that now, like, if you are in a position or you are much interested to have this PDF, yeah, I will be having my own website whereby I will be posting these PDFs. These are my own written PDFs. You can be in a position to go and read them or download them and use them for your own benefit. Now let's go a quick recap. We have talked about the consolidation, or the definition of a consolidation, whereby we have talked that consolidation is whereby the market is making equal highs and equal lows. We have talked about what expectations should you have as a trader once it comes to the trade. Like, once you have found that the price of a certain chart or price of a certain pair is in a consolidation, you're supposed to have two expectations, and the first expectation is the breakout, which is most the case. The second one, you're supposed to expect that the market might stay into that kind of a consolidation state for long, which is impossible. I have never seen a market whereby we have a consolidation full time since I started trading. Now, once it comes to the breakout, we have three types. We have the upward breakout, we have the downward breakout, and then we still have what we call the fake breakout. For the upward, the market shows that it is in a position. Upward breakout shows that the market is now ready to move into an uptrend market. For the downtrend, the market is now ready to go into the downtrend. Now, once it comes to the fake breakout, this is whereby the market runs for your stop loss and then start going to your direction. But I am much sure that if you have done your own analysis, both technical analysis and fundamental analysis, you are in a better position so that you can be in a position to anticipate, or you be in a position to react. The best thing you can do for these to trade consolidation market structure, or whenever you are trading, is to react from the direction. I really appreciate you guys for this, for coming to this channel and learning. Smash that subscription button, and remember to turn on the notification so that once I have uploaded any video, you'll be in a position to come and consume the content, and you'll be in a position to benefit from it. Any recommendation or maybe any comment, let me know from the comment section, whatever is in your mind. Now, see you guys for the next time. I really enjoy your trading and make money. Stay rich. Bye bye.